All right, my beautiful friends. It is Thursday, November 15th, 2018. So what's going on amidst all this whatever? Well, as I am doing this video blog, stocks are down. Nothing dramatic. There's a lot of cash pouring into that bond market. The U.S. 10-year yield 3.08. So we'll see how that plays out. The dollar is a little stronger. Cryptocurrencies are still getting cremated. And that's something else we're going to need to watch. Because like I said yesterday, when an entire asset class like that, gets decimated. Yesterday, there's no other way to put it. It could be a sign of something else. But again, this market to me, and I know I've been getting a lot of flack and a lot of feedback from people who really feel that this is it for the markets. And look, maybe you're right. I just don't see it right now. And again, what I'm talking about is pretty straightforward. I don't care about corrections. I don't care about pullbacks. They don't matter to me, and maybe that's why I have the attitude that I have. What I'm looking for is the big one, and some of you think that this is the big one here, and maybe you're right on that too. I just really believe that the big one is going to begin when there's an uncontrolled sell-off in the bond market, when rates spike rapidly. That's what I'm looking for. I honestly, the way I trade, because of credit spreads, I don't care too much. In fact, almost not at all with regard to these movements in the market. It doesn't affect my ability to make cash. As a matter of fact, 7 of my credit spreads expire tomorrow. If you want to see what these are, just go to my website, traderschoice.net. There is a link in the description of this video. There is no way, and something dramatic would have to happen, that these 7 spreads that expire tomorrow are going to cost me money. More than likely, I'm going to be keeping 100% of the premium on every single one of those 7 spreads. Go look at them. Look at the strike price of the puts I sold. Those are the only ones I care about. As long as the price action of the underlying stock does not drop below the strike price of the puts I sold, I couldn't care less. Even if it finishes up a penny higher, it doesn't matter to me. I still collect 100% of the premium. So, again, and I've said this, people just aren't used to seeing these gyrations in the market, but this is not abnormal. People are only used to stocks doing one thing, and maybe it's the way I trade. I don't care. I don't care about pullbacks. I don't care about corrections. All I care about is finding out when the big one is coming, and I just don't see it now, because as I've been saying since day one, before everybody else, and I mean everybody else, from years ago, it's going to start in the bond market, an uncontrolled sell-off. Right now, they're buying up those bonds. Bonds are being propped up. Some of this is a safety play. I think there is some fear here in the market. We saw that yesterday, and that may mean, I'm going to go out on a limb here, that a bottom might be coming soon. So I don't care about these moves in the market. They don't affect me, and they really shouldn't affect you either if you're trading correctly, in my opinion, because in this market with this kind of volatility, it's very difficult if you're just using a straight up call and a straight up put, not hedging them, not using credit spreads, and you can get hurt. You can make a lot of money too, but you can get hurt. All right, with that said, let's keep our eye, honestly, on the crypto space. The reason for that, like I said, when an entire asset class gets hit, that may mean something else is coming. Right now, I I'm not sure that's the signal, but it's something we need to keep our eye on. There's just no doubt about it. Most importantly, bond market and dollar. You all know that. And the charts are all set up for you free on my website, traderschoice.net. All right, my lovelies, we will reconvene later in the day. It's going to be just as fun as now. I'll see you later.